Hi, gonna do an end of month review of the 5%ers account. And a warm welcome to one and all. For those of you who have not seen me before, it's Langers, and I am the coffee driven Scruffy trader. And what I'm trying to do is kind of take you through trading from the perspective of someone who just works from home. Quite simple. The videos are mainly just me at my desk and sort of having a coffee and a chit chat and taking the mickey out of the world.
No way!
And doing the odd challenge from time to time. So if you like that sort of stuff and you love trading and you want to get involved, please click the subscribe button, smash the like or even the dislike if you don't like it, because it all genuinely helps the channel and lets me know what you like and don't like. So what am I doing and what's all this about? Well, what I'm going to do is I'm going to do a review of an account that I'm trading up in front of you to show you that trading can be possible using a prop firm. And if you don't know what a prop firm is, it's a company that'll put up the money for you to go to market and then you share the profit between you. And
isn't that logical?
the company that I've been using and recommended to is the 5%ers. Now you may have seen this journey start sort of in April time, and this is the first full month that I've actually done on it. And up to now, it's had its moments, and it's certainly had its moments this week. And I'll explain that as I go through, because once I've shown you the figures, I want to kind of talk to you about the mindset of trade management. If you get that wrong, you might as well just pack your bags and go work a normal job. You see, too many people think trading's easy. And, well, all right, I'm going to rephrase that, because trading is easy.
Are you serious?
The hard part is you.
What?
And controlling your emotions and actually controlling what you're seeing on the screen. But if you follow a set of rules, the process becomes relatively simple. I have a certain system that I use. I've developed it over a long period of time. It's very simple. There's nothing spectacular about it. I go from zone to zone, but I can read market conditions. But my strength, I guess, comes from controlling the emotional side of fear. See, the markets don't frighten me. And when something goes wrong, I don't get frightened. You know, if anything, it's almost a challenge, and it keeps the blood flowing. Because when things go wrong, that's the time that separates the men from the boys, sort of thing. See, a lot of traders, and I'd be interested to hear your thoughts in the comments. If something is drastically wrong, they just hang on a prayer that this will come back. No. If you've ever run a business, sometimes you've just got to have a fire sale and get out of trouble. And you're better off salvaging something than losing everything. And it's that simple. You know, I'd rather lose 100 quid than lose 300 pounds. One will hurt, one will damage. And there's a big difference between the two, and I'll touch on that in a moment. So let me show you what the 5%ers are. I'll just pull my screens up. It's my current stats. I had a stinker of a day yesterday, and I'll talk you through that. Now, the 5%ers is this company here. They have a number of ways to get into market, but basically what happens is you pay a small fee, whether it's the low band of 275 to get a funding of 24,000, up to 875 for 80,000. Now that sounds great, but there's wins and losers on each side. Well, saying losers, there's wins. The win for the company is when you pay your fee, you're effectively stumping up the stop out. Because if you let the account run down to a certain level, it just automatically terminates. But you've already paid that risk factor up front. So that's a win for the company. The win for you is the amount of money that they give you to go live into the markets immediately will allow you to trade pretty much any product you want. Because if you initially, if you take the bottom one for argument's sake, their assessment is $6,000, so you'll get $6,000 straight away. And what they want to see you achieve over the course of 180 days, this is if you're on the lower account, by the way, low risk, $375. And you've got quite a long time. It's roughly about 6 months to do it. So it's essentially 1% a month. And if you achieve it, once you've done the milestone, they will quadruple the 6 into the 24,000. And then they're looking for you to grow that fund every 10%. And every 10% growth, they will double your account till you're over $1 million. So it is quite good. If you're super aggressive, there's another program they do, which is a 60-day program. You have no restrictions at all, because you don't even have to have a stop loss on this one, but they are expecting you to be very aggressive. And it's a tough call. It really is. But the low risk is the better of the two, to be honest, because it's forcing you into using stops, and your stop is 1.5%. So you can still have a good wide stops, which suits me down the ground because I have a wide stop and I like to let trades breathe. So this is how it works. The program that I am on is this one. It's the 52,000. So I'm starting with 13,000, and what they are looking for from me is $910. Okay, so I'll take you through all of that and I'll show you my stats. So that's who they are and what they do. If you're interested in trying this, there is a link in the description that if you sign up with them, you'll get 5% cash back using that link. And really, if you've got limited funds, it's a good way to go to market. Because if you try to trade up your 275, or in the case of the top one, 875, some of the products that you look to trade, you can't. But more importantly, you've got limited room to maneuver with it. In other words, if you've got one trade that's not doing so well, you can't open up another one to offset it because you haven't got the funds. Whereas if you go through the prop firm, as long as you're sensible with your position sizes, etc., you will have enough money to open up 2 positions at once, so you can always offset one against the other. Whereas if you're just going in with sort of 275, it's one product at a time, you'll be struggling to split your bids, all that sort of thing. And what I would suggest is start this way, build up your portfolio, in other words, draw your profits off, and then use your profits to fund your own account. And then you've got the best of both worlds. You have a fund you can trade that you're still getting paid with, and then you can recycle the profits into your own live account and increase your profit share.
Good job.
Let me pull up my 5% sheet and I'll take you through the figures. So this is the program that I'm on. As you can see, it's my name. That's the current balance. And the objectives on this one was to achieve $910 in 184 days. Okay. And I could not exceed a $520 drawdown, which meant as long as I kept the account above 12,480, it's fine. soon as it hits that threshold, game over. So I had to be very careful with it. And this is why sometimes when you are trading, it's very exciting to put big positions on. But you've got to look at the risk factor as well. All right. As long as you control yourself and don't stop the inner demons taking over, just do it logically. You know, Rome wasn't built in a day. It takes time. Well, it might have been if I was on the job. Sorry. It's an old running joke. But what I'm driving at is just slowly carve away at it. And if it's wrong, and something is going wrong, don't panic. Have an exit strategy. As long as you've got one, stick to it and you'll be fine. So let's go through this and I'll show you my spreadsheet, and then I'll quickly touch on sort of management techniques and something that runs through my mind. So that's what I have to achieve. My progression at the moment is I am 307.49 rather in profit. I have no flags against the drawdown. Well, I'm in profit, so it's going to be zero. Since I started, I've actively traded for 29 working days. Now, some days I don't trade this at all, so that number will fluctuate. And I've taken 345 trades. Okay, so yeah, it's a reasonable amount of trades, but got to remember I sort of do multiple positions, one thing and another. Now, as a distribution, you see them here. There's a lot of green. There is red. I do lose. I lose a lot more than you think, but I control the losses because when I see it wrong, I kill it. Simple as that. My growth chart is here. So, get that up. There we are. Is this. And it is growing quite well. Now that's the pip count, and there's a tail off at the end, and I'll explain that when I get on the spreadsheet, because I closed all the positions off yesterday. I wasn't going to carry a certain trade over the weekend because I thought it was going to go wrong, and then the balance, it's made it dip down quite a bit. It cost me a bit of a chunk yesterday. It was about $80 it cost me. But I was prepared for it, and this is the thing, and it's what I want to touch on. It's almost like a game of chess. Sometimes you have to give your best piece away in order to win the war or win the game. It's just the way the world is. Sometimes it's wrong, just close it off, lick your wounds, fight another day. If I hung on to it, this could have been horrible on Monday morning. And I'd rather lose 80 than 380. Simple as that. And I'll show you that process in a second. Now down here is the breakdown of the positions that I've had open, which is 345. I am holding my win rate at 86%. So I'm quite chuffed with that. So 298 wins, 45 losses. So that keeps my win ratio in check. My gross profit, or my gross pips rather, is 2,924. And I have lost 709. Okay, giving me a net profit and pip count of 2,215 net. I'm quite pleased with that. My expectancy is better again because there they are there, and it's averaged over here. So for every 0.36 I put on, I get 0.62 back. And my average position size is 20p. Just 20 pence. And I'll explain that a little bit more on the spreadsheet. So that's the live figures. These can't be manipulated. I know you've got the old sort of pop eyes out there who dig into me all the time saying, you can't do this, you're shite and all that sort of rubbish. There it is in front of you. Black and white, third party. Nobody can change this.
Yes, Bull.
Shut your hole!
It's there and it's a verified statement. You know, you can beat me, fine. But I can't be any fairer in this, guys. That's as clear as it can be. All right. So let me have a look at my sheet, which is here. So my summary is this. So for the month, I am green. So it's the second green month in a row. My average size is this here. And as you can see, it is down. And there's good reason for that. I wanted to compound up, but whenever the market is going against me slightly, I curb it back. And that's why I've put this section here in control my position compounding. In other words, I'm going to cap it. I'm going to slow it down because I don't want to put on a position too big for the size of the account. And when you've got a big win rate like what I have, it doesn't take long to get the position sizes up very high. You can get it up to sort of 10 quid very quickly. So I'm capping it at a fiver to start the month off. But then I'm also splitting that by 5. So it's actually capped down to £1. And then each one of those pounds is going to be capped down to 20 pence. It's a strange way of doing things, but for me it works. It just means my level 1 trade will open up at £1, split into 520p's. If the madness comes in and I go to the next level, I'll put another £1 on, another £1, and there's 5 levels in Scruffy Madness. Makes a fiver. Alright. But if I only go to level 3, I'll only have 3 quid at risk. That's kind of the way I do things. And it's kind of what got me out of trouble this week. So May, as we can see, we started with sort of 13,109 and we've ended with 13,307. So we have increased quite well. In fact, we added 1.69% to the account this month, and that's pretty good. I'm quite pleased with that. You know, let's give it a good profit. My win rate has been in check. And as you can see, it is small position sizes. And yesterday on the 28th, I started closing positions off. I was in sort of pound euro. It was going well. It slammed against me late Thursday afternoon. I held it overnight. I worked on getting it out. And I was countering it against the trade that you saw me take on my other account, because what I do with this is I mirror my normal trades. And I was on pound JPY, so what I did on the video you saw yesterday was mirrored on this account, and that offset the losses of the pound euro. And all right, I came out of it minus $87, but bear in mind I'd hardly lost that month. It didn't matter, because I started with 0 and I ended with 1. And that is the key element. It doesn't matter what happens in the middle. As long as I end the month with more than I started the month, I've done okay. And I try to work that on a daily basis as well. It doesn't always work. So it's kind of best to do it on a weekly basis. So whatever Monday is, I want more on Friday. And then do the process the week after, and then on a monthly basis, it's a similar thing. So that's pretty much what's gone on, and I'm quite pleased with it. Now, I touched on compounding. Now, I do have a compounding plan that I work to, which is this. And what it means is every time you put a bid in, you increase it. So if you win, say 15 pips, you would then move to the next level. Then the next level, and the next level. If you lose, you go back a step, and then start again, so forth. But it can quickly rack up. It really can. And that's what was happening here. And what happened was it was up to nigh on £10 a point, and that meant that my position sizes was between 30 and 40p a pip across 5 positions. And when something went wrong, it hurt. It hurt too much for the size of the account. So I've calmed it down. I've halved it back to a £5, and I'm going to start at a £5, and it's only going to increase when it now hits the average of 15, whereas before it was at 10. So what I've done is I've recognized that the position sizes were getting too big, so I calmed them down. I'll still be trying to hold the trades a little bit longer, or at least hold one of them longer, as per one of the rules I put in April, and eventually it'll just balance out. And that's the whole idea. Now, at the moment, I am kind of 33%. I'm a third of the way into this challenge. I've got 602 quid, or $602 rather, to go, and I've still got thick end of 5 months to do it. So time's on my side. I'll just ebb away at it, and it'll be fine. So they're all my stats, and it's kind of real time. We moving into June, so see what the summer brings. And well, that's it really. It's about as simple as that. But let me just touch on trade management, the emotional side of trade management. You see, I mentioned earlier, you start with 0.
Plain 0.
And you end with 1.
In the end, there can be only one.
But what does that actually mean? Well, ask yourself this question. What is trading? And I know you're scratching your head going, that's just making money and get me a bloody Lamborghini.
You ding dong!
That's why you fail. Because you possibly don't actually know what trading is. See, most people automatically think trading is just clicking a couple of buttons and X marks the spot, and those that are at the top have a secret key to a secret club, and you lot are all locked out because we know the secret indicator and you don't. No. I know as much information as what you know, what that screen tells me, because I'm looking at the same chart. So I can paint the same picture. But what is trading to me, which is different to what it is to you? Well, to me, it's a job. It's not get rich quick. It's certainly not the road to riches. It is just a job. Now, with any job, it can be the simplest job in the world, but there are certain techniques that you pick up through time just by doing the same job. You find the shortcut. You find the easy way to do it. If you're a warehouse person, and this is as far alien from trading as you get, a box handler, you know, suddenly you know the best route around the warehouse. So if you're a picker and you're going from one side of the warehouse to the other side of the warehouse to pick your items up for the packer, you know the best route. And the reason you know the best route is because you travelled it 1,000 times. You know where the products are, so that saves you time as well. When you're stacking the shelves, because you may have to work out how your aisle is laid out, you will instinctively know which ones you pick all the time. So you'll have them at standing height and you can grab them very quickly and walk away, and the ones you don't pick up so much are down on the bottom because you don't want to be bending down all the day because you don't want to break your back. So what's all that got to do with trading and the slice of bread? What it means is that you know your job. But if somebody new came into it, you can say, go pick that box. You would do it 10 times better, just because you've been around it a long time. So you know the rules of the company, you know the rules of the floor, you know where the products are, you know that when your knife is blunt, you're better off changing the blade, so you know when to use the right tool for the right job. And you keep your work area tidy. Why? Because it saves you in the long run. Trading is no different than any job out there. You just need time to understand it, be around it, understand what tool works best in which situation. You know, if you've got a strong trend that you can see, an oscillator is a waste of time for you. But you bought the course, and the course says, well, if I change the stochastic to this is going to make me money. It will, if it's in a range-bound situation. If it's in a trending situation, it'll cut you to shreds. Well, I bought this other course, and it says a moving average, and it says if I use this setting, I'm going to be walking paths of gold. Well, you will. It's in a trend. But if it's in a range bound, you're going to get your face ripped off. It's knowing the right tool for the right job. And that's what trade management is all about. It is knowing the right tool for the right job. And once you can recognize the trading conditions, and then you can apply the right rules to it, the whole process becomes a little bit easier. You see, I spend a lot of my time picking the market I'm going to trade. You see, a lot of people just, they'll ask the question, what's the best market to trade? And you've seen my window of the world, it's always predominantly the same 8. And at least one of them will give a signal per day. And it's predominantly DAX and cable that do it. Why? Because they're fast and they move. But if I just used one tool on it all the time, it'll cripple me. You know, I'll just lose money. And the reason I know this, I've done it. Because I've been in the same chair that you guys have sat in. You know, bought this course, been in that seminar. And you believe you find the magic indicator. It could be the ADX. You know, this is amazing. I saw it. It makes a fortune. It does, if it's applied right. You have to know how to use the indicator. And then you've also got to know when to use the indicator. That's the key point. But then you go a little bit further than that. Because once you've figured out what the tools are, you have to use them. And not only do you have to use them, you have to have the components in the right order at the same time. And what I mean by that is your risk needs to be in check, your profit needs to be in check, and your balance needs to be able to cover the both of them. And I know you scratch your head and you go, I don't follow that. Because one of the best tools you have, going right the way back to the start of this video, is the equity you have in your account. And it takes money to make money. Because if you think you're going to flip 200 quid into 2 million in a year, you're in cuckoo land. You really are. It just doesn't happen. And it's to do with margin. Because you need a certain amount of money in order to open up a position. So that becomes a tool in itself. And that's why a prop firm is good, because they're giving you a pot big enough to open up these positions. And that means the position size then needs to be transferred into risk. You know, so you're sort of thinking, well, I'm going to risk $100 on this trade, and I think the market stock should be 50 pips down. Right? Well, there's your risk. 50 pips down at $100. And then all you do is you divide 100 by 50, $2 a pip. And then your profit is the other way. So you've worked out your sort of position size from your risk, and then your profit is what you can get. Simple as that. And that's why I say about chess, if you know what the downside is, I am going to lose this amount of money, then you're willing to sacrifice it to get the greater good. And that's what I did the other day. Now, if I put on all of my position size is one go, I wouldn't be losing $80. I'd have lost the thick end of 400 because I like a wide stop. Because I break up the positions and then I buy in at different levels, I actually only ended up losing 87. So my risk factor was down considerably, even though my position size was maybe a little bit too big for the account at that time, which I recognized, and it's why this month I'm addressing that. But I had the mental stability to kill it because it didn't get to level 5. I killed it at level 4 because it was getting to the end of the night. I recognized that this could gap against me on Sunday night, and I didn't want to be on the wrong side of it, and I'd rather start the month afresh. So I just killed it. Whereas a lot of guys would hold it and pray, like I've shown you before, that this will come round and it just blows your account. Because eventually what happens is it doesn't come round. And that's the day it keeps chugging and chugging. You get frightened, you might move your stop away a little bit, and then you think it'll be fine. So you move your stop a bit further, it'll be fine. And this is all fear. Now, how do you combat that? Well, that's why I break my positions up. It allows me to maneuver. It means that as it's going for me, I can take positions off but leave little bits running, and it's preset for me so I don't have to worry about it. So that helps the psyche. And as it goes against me, I know what my maximum position size is, and I know what my maximum loss is going to be. But then I break it up, and then that maximum's never hit. It's a very, very simple way of doing things, and it keeps my risk reward in check. And ultimately, that's what trading is. It's treating it as a job, and you're planning for the positives, but you're always prepared for the negatives and the worst. And as long as you prepare for the worst first, and that's why I told you at the start, when you look at it, see how far you're going to risk, work out how much that's going to cost, and then that gives you your pip or price per pip to go into profit. You find you end up not so much becoming a trader, more a risk manager. But if you control that side of it, the money looks after itself. Simple as that, guys. So just something for you to think about. If you're stuck, I'm easy found. All my contact details are in the description, etc. Like I say, there's links for the prop firm if you're interested in trying it. And I'd be also interested in your thoughts. You know, do you just go for it? Because some of them do. They just literally go at it like there's no tomorrow, and like sort of devil care less. It's a bit cavalier, but it means you blow your accounts up. I'd rather just plod along, grind at it. You know, this is going to take 6 months. All right, I might do it in the next 2. But it's been a process, and it's been a planned process. And I'll be interested to see how you would have tackled it. Anyway, when I enjoy my coffee, sun's shining outside, Winky will be in soon. And hopefully she'll have a sympathetic head on, because I haven't been very well this week and she's been awful.
Are you trying to get a rise out of me? Are you happy now? Is this what you want?
She doesn't like it when I'm ill. Apparently it's not the done thing. Cow. She's still my best friend. But anyway.
Splendid girl, and so helpful. Do you know she's been showing me how to stick the pole up?
Keep trucking, guys. And as always, do what you love. And the money will follow. See you all in the next one.